Order blocks are so popular, but most traders use them wrong. They draw their zone, wait for price to retest it, and take a blind entry hoping it'll work. This is just gambling though. You need real confirmation, because not every order block is good. Some are stronger than others, and if you trade the weak ones, you're going to get wrecked. But don't worry, in today's video, we'll show you 3 ways to find the highest probability order blocks. We'll share real examples as well, so you can implement this in your own strategy. Let's get into it. We'll use the price action toolkit indicator to automatically plot order blocks on our chart. There's a link in the description to get access. We don't want to trade all of the order blocks though, so to filter out the weak ones, we'll toggle the Volumetric Info setting. This will show us a mini volume profile for each order block. We can instantly see the total volume in that area, a percentage ratio between buyers and sellers, and a visual display of the buying versus selling volume. A lower percentage indicates a dominance of buyers or sellers, depending on whether the order block is bullish or bearish. So how do we use this? Here, price taps into a bullish order block, but if you look closer, you'll see the percent is high. That's a red flag. It indicates that buyers aren't strong in this zone, so you can ignore this trade. Instead, wait for price to come down to this order block below. With a low percentage and high volume, the zone is very strong. Once price retests the zone, you can look for long entry opportunities. Now let's see this in a bearish scenario. Price retests a bearish order block with a high percent. This indicates sellers are weak in this zone and price might rip through it. That's fine though, because if you look above, there's another bearish order block. But this time, the percent is much lower, indicating a dominance of sellers. Once price retests this zone, you can look for short entry opportunities. That's how you can use Volumetric Info to filter order blocks. But volume alone isn't enough. You also need context, and that's where higher time frame order blocks come in. These are powerful, but drawing them manually, super slow and messy. Flipping between different time frames wastes time and you'll miss trading opportunities. That's why we added a multi-time frame feature to the price action toolkit. Jump into the settings and select 3 time frames you want to use. On a 15-minute chart, instantly see 30-minute and 1-hour zones without ever switching time frames. There's a few different ways to use these, but here are some of the best. Picture this. Price pulls back into a 15-minute bullish order block. The percent is low and there's a lot of volume. Looks like a textbook long opportunity, right? Wrong. Enable the 1-hour time frame and you'll see why. There's a 1-hour bearish order block right above it. Stronger, higher time frame and still intact. That's a red flag. So instead of taking a long entry, you can wait. If price pushes through and breaks the 1-hour bearish zone, it'll flip. The bearish order block turns into a bullish breaker block. And yes, the price action toolkit automatically plots breaker blocks on your chart. Once price retests this new higher time frame breaker block, you can look for long entry opportunities. Here's another way to use higher time frame order blocks. Here, price is in an uptrend and starts pulling back towards a bullish order block. If you enable a higher time frame, you can see there's a stronger zone hiding right below. So instead of taking an entry at the zone from the chart's time frame, you can wait. Once price reaches this higher time frame zone, you can start looking for long entries. Higher time frame order blocks keep you aligned with the big picture. They help you avoid bad trades, spot stronger zones, and time entries with real conviction. If you're not using higher time frames in your analysis, you're going to get wrecked. There's another way to analyze higher time frames too. This tool can scan up to 8 different tickers and time frames for price action features. We'll only focus on the market structures. Specifically, we'll watch the change of character or CHACH. Let me show you some examples. Here, price is retesting a bearish order block. Before taking a short entry, you'll need to confirm the trend. Check if the market structure is bearish on higher time frames with the screener. Here, the structures are bullish on higher time frames, so you can ignore the trade because you don't want to trade against the trend. And just like that, you avoided a losing trade. Let me show you another example. Here, price retests a bullish order block, and if you check the screener, there's bullish market structures from higher time frames. Now you can be confident that you're not trading against the trend and take a clean entry. Set your stop loss and target and let the trade ride out. Confirming the higher time frame market structure helps you avoid trading against the trend, and you know what they say, the trend is your friend, so don't trade against it. So whether you want to filter order blocks using volume, higher time frames, or the bigger picture, you can. And the best part, you can get access to the price action toolkit and screener for 30 days risk-free at fluxcharts.com. There'll also be a link in the description for easy access. That's all for today's video. If you learned something new and found this helpful, make sure to leave a like, comment, and subscribe to the channel. Thanks for watching, and until next time.